Hello, this is the Chartprofit webcast. Friday 19th of June, we're approaching 2.5 hours into the trading day. Looking here at the E-mini S&P, this is the September contract. Just looking here at this area, which is the last 4 months, the slightly higher trading range that the market's been in. The value area low, looking at the distribution across that period, comes in here as we noted. And earlier this week, that value area low was probed here, and the market has rejected that value area low and has auctioned higher. It's done that quite aggressively, as often happens after that sort of rejection, and we marked aggressive buying on the Tuesday, and the E-mini is now printing back above its major point of control at 20.95, which is here. We've actually printed a value area yesterday above that level, so in the short term this is encouraging price action. Just want to look at that longer term point of control. As you know, I measure these controlling prices over different time frames, but back from October, I believe a distribution began in October, and in November that point of control was established at around 20.33 here. We saw a lot of oscillation around that level in the early part of the year. That level remained the point of control and therefore support going into March, where for a very brief period it migrated higher to 20.66. We dropped lower back in here to 20.45. Early in April, the previous point of control had provided support, but throughout April, 20.45 was the major. We had 20.95 established on the more minor time frame in here, just a little bit higher, but the major remained at 20.45 until early May, when it migrated higher, if you remember, to 20.95. That was in here. Then we had some support, and this was a disappointment when we broke down below that level. But early this month, the E-mini rallied. The point of control migrated slightly higher for a brief period, once again at 21.07, but now has re-established at 20.95, and that remains the major level to watch. So price back below here would once again be a concern. Seeing positive improvements in technicals, but this seems to be a market that's currently obviously very concerned about the Greece situation. The Fed keeping interest rates on hold caused this little spike here, but obviously we have the European concerns overhanging the market still. So 20.95 is the level to watch. So price below that level would be a concern. This is the daily breadth indicators for New York. They are improving. These two indicators still not in a supportive position, but for the Nasdaq they are currently, have been for a while, good few days. And for the Russell, the same, seems to be the outperformer at the moment, breaking out here to a new high. As I said, the New York breadth not quite supportive, so we still have this red situation on the breadth component on the pulse chart. Price oscillator is still negative here, but it is heading up a little, as are all the momentum indicators, or rather the momentum indicator on all four stock index ETFs that we follow. Quickly reviewing the ETFs, this is the Spider. 209.92 is the 12-month point of control. Currently printing above that, off a little bit today at the end of the week. Here's the relatively strong chart, the Russell 2000 pushing out to a new high. Price back below 124.50, the 7-month point of control would be the first concern. Large cap diamonds, as you can see, lagging a little here. The other three ETFs. 180 dead is the 12-month point of control here. And finally, here's the Qs, printing close to the highs here, with the support, the 12-month point of control at 108.60. So currently all four printing in a strong price location above their points of control. Things may get volatile going into next week. There's an emergency meeting in Europe on Monday, once again trying to resolve the Greek situation, but we have our levels, and as long as these ETFs hold these levels, they're in strong price location. Let's quick look at the DAX and the FTSE. This is German DAX, off the lows of the week, but it's European index below its point of control here, as is the FTSE 100 UK, again off the lows, printing above its major point of control, but I'd want to see the FTSE index printing back above 68.34 here to put it back in a strong price location. So basically this is support here, and this is resistance, but price here will be much stronger. We looked at this chart last week, which is XLF, the financial sector. So last week it was a relatively strong chart above this level, 24.25, which is the major point of control, and it remains close to its recent high here. So seeing financials and small caps at the moment as outperforming sectors. As I mentioned earlier, the market seems to be very much news related and preoccupied, but technically as we've just seen, breadth isn't great, but it's improving. Momentum isn't great, but it's improving. And there seems to be some pessimism out there. This is the right assets ratio close to its lowest level here since October, showing a relative high degree of, well, over recent months, high degree of pessimism, which is usually contrarian bullish. And if we look at the public poll from AAII, there's a lot of notes here. If you wish, you can read the ebook, or if you just pause right now on the video, maybe read these through. In brief, the bulls percentage was slightly higher this week. Last week, previous week, hit a 2-year low in the bulls percentage. But this 4-week moving average of net is now negative and heading lower. It's actually the lowest since June 2013. There isn't a massive sampling, as I understand it, in this poll, but historically it's been a pretty good guide. So we have to say the public poll pretty negative in sentiment at the moment. So I'm just breaking it down a little here. What we're looking at here is just the bulls percentage in isolation. I'm looking at a 4-week moving average of the bulls percentage, and that's actually at its lowest level since 2009, which seems quite strange considering the market is actually up here and close to the highs. The 4-week moving average of the bears percentage up around the highest here since October. It's just exceeded the high that it reached here in March. So the public appear to be certainly stating that they're fairly bearish at the moment. And this is the exposure index, which is a measurement of active money managers' current equity exposure, and that fell to 58.64 this week. That's the lowest reading again since October. So increasing bearishness in money managers. It's still a reasonably high number. This certainly isn't a low number like here and here, but it is the lowest for a few months. Lipper US fund flows reported equity fund, including ETF inflows of 6.9 billion to the week 17th of June, and that's actually the 4th consecutive inflow, and it lifts this 4-week flow that I follow in yellow here up to 16.2 billion. That's not excessive, but it is increasing. Okay, let's quickly review, as we usually do, our supporting charts. This is the T-bond ETF, TLT. The major point of control, which is long established at 117.14 down here, is currently supporting this chart. We had this probe, which was quickly rejected earlier in the month. The main thing, I think, is that if we see price below this point of control, that would be extremely weak and a little concerning. Currently, we'll just see if bonds can hold above this level, or this chart can hold above this level. We have this currently this positive divergence between momentum and price action. This would need to turn back up convincingly and possibly cross above zero before we can say it's playing out in any way, but I'm not prepared to buy into this. But it's just kind of encouraging that this has halted the decline that we saw from April and IEF, the 7 to 10 year ETF, and this was concerning, this probe here below its major point of control. We have recovered. 16-month is at 105.85, so price above there would be again an encouraging development for bonds. Levels on the GLD gold ETF remain the same. The 18-month point of control at 115.12 in here, currently probing into that, a little pop at the end of this week. This halfway point, which has previously resisted any rally, is for me the first level of important resistance. It's a proven level twice here, and we have been oscillating around this 18-month. So price up here would be a big improvement in price location from my perspective. Currently I'm still seeing this as a weak chart, and certainly silver, these two probes here into its 18-month point of control were rejected. Okay, this is the oil ETF, USO, 16-month point of control at 1839. That's the level that we've been monitoring. This is the only chart actually where we've seen a change in level, because that 16-month point of control has actually migrated higher to 2024. So this consolidation area here, which was above the previous point of control and looked to be an encouraging development, has actually lifted the point of control up to 2024, and that now means that I want to see price above that level. A higher low, a clear higher low would be bullish, but price printing below that level, just as we are right now, kind of puts that in doubt. So though the point of control has moved higher, it's not necessarily a bullish development. So I'll just reiterate, I need to see this kind of price action. Just finally for commodities, this is DBC, the commodities ETF, and that is printing below its 18-month. In fact, we had this little price probe up into it, so again, that would be more encouraging for this chart than what we're currently seeing, which is time being printed below that point of control. So I'm not yet tempted into these commodity ETFs. That leads us on to the dollar. See further weakness here in the dollar chart, dollar index chart, and elsewhere in the pairs. You may see those commodity charts improving. So the dollar index currently printing here. We were getting support from the 12-month at 94.67 in here, but just in the last couple of days, at the end of this week, just dipped below it. We did it before in May and came back. If the price action at that point had been like that, it would have been more encouraging. Maybe the dollar index is just building this 12-month into something more important, but price below, as always, a weaker price location. So we'll look at the dollar charts. This is against the this is the pound against the dollar. We've had these big three levels of overhead resistance since April, but the pound is getting a little overbought here, but currently doing rather well against this resistance. The major half range here, as we know, in May proved itself. We're currently printing just a little above that level. On a longer term basis, we've got 160.37, which is the major point of control up here, which may be a problem, but if we see the pound up here, that would put it in a really strong price location. So this chart improving against the dollar, and the euro as well. 12-month at 113.40 in here. Price above that level, higher low, something like that would be much stronger price location than we've seen this year. If I zoom all the way out on this monthly chart back to the low in 1980 to the subsequent high, you can see where that halfway point, this dotted blue line, comes from. Often these levels become attractive over time, so we could see a lot of consolidation around here. So I'm not interested in the long side yet, and when you see where this halfway point comes from, really important level. Even in the short term, you'd certainly want to see that kind of pattern, because further consolidation back below that level would put it back in immediately in an extremely weak price location. This is the Aussie dollar. This very decades, when I say major point of control, spot 76, and this is obviously proving itself as support. It may take time. I'd certainly want to see this kind of price action back above this major half. to confirm any strength we might see here. So again, not interested in the long side, and one thing we can say for sure is that price down here below spot 76 will be extreme weak price location. Dollar yen, 119.64 is the 12-month point of control, and we are currently holding above that level in a strong price location. A little bit of weakness over the last few days. Spoke over the last 2 or 3 webcasts about the unclear picture and the frustration that we're currently seeing in the charts. They're printing close to really important levels, and in the big picture there seems to be just a lack of clarity and directional conviction, and that really remains the case. Hopefully that's nothing more ominous than just a stalling situation over just this news related market, and hopefully we'll see things clarify. And by that I mean, in the bigger picture, that could be equities holding above their major levels, with possibly T-bonds breaking down into a weaker price location, with possibly the dollar index or the dollar itself remaining weak in a weak price location. But with all of these major charts actually printing close to their major controlling prices, which is often an indication of uncertainty, it's prudent to wait for them to line up with a little more clarity than they're actually doing at present. Okay, that will conclude, and once again I wish you a good weekend and thank you for watching.